Morning. Today is March 13th, 2024, and I'm back with another edition of the Wednesday live show. And as you know, I was here last week. I had taken a little bit of time off prior to that, but everything's everything's going good. The weather's starting to get a little bit nicer, and the market is doing what it's doing, which is not a whole lot different than what it was doing last week, right? Um, Here's my go-to chart that I always start off with, when I'm starting off with now anyway, and just a daily chart of the S&P with this major trend line. And I talked about this last week, but this chart's a little bit deceiving because it looks like a nice, orderly, perfect uptrend. And of course, the market, the S&P's at nominal new all-time highs. But here's the thing, this is an extremely, extremely steep uptrend, and quite frankly, it's kind of amazing that it's still intact, especially given the fact that, well, given the fact of all the stuff going on in the world, but besides the idea that the inflation numbers came in hotter than expected yesterday, and it was kind of surprising to me. Initially, the market sold off early in the day, and then it just turned around, mid-morning or whatever, and rallied back up. And the funny thing is, it actually closed, the S&P did anyway, at a new all-time high. And so, there was kind of like a little one-day dip going here, and it looks very similar to this one back here in, I guess it's January, right? You had like a sort of a little dip, and it was like a little one, almost like 1 or 2 days down, and then they just buy it right back up. So so far this year, I mean, I think if you guys recall, 2017 was a year where the market just was like really tame. The VIX was really low, and it spent the entire year just kind of creeping up every day practically. I don't think there was more than a 3% dip at any time during 2017. And so, I mean, here we are, we're January, February, March, so we're, in the middle of the first quarter here. Well, we're past the middle of it. I mean, there's a few weeks left of the first quarter, but it's reminded me of 2017. So, um, but anyway, what I was about to say is that with the inflation data and the fact that the Fed has backtracked on, going into the year, I think there was like expectations for like 6 rate cuts and all this stuff, and we talked about this last week about the Fed pivot, all the rallies we had last year based on a Fed pivot, and so now the expectations are that they're going to cut in June, which has been pushed back, and there's a lot of warning signs out there, but nevertheless, looking at the chart purely objectively, we're still in a nice, solid, strong uptrend here. And, the yellow flag will come out when this trend line here is broken. And then, of course, you got the 50 and the 200 and all that. So let's let's move on to this chart. This is what I was talking about. This is what I was talking about as far as the steepness of this uptrend. I mean, it's just, look at that. The angle of this particular, of the current uptrend, I should say. And look at that 50-day moving average there, that line right there. But the angle of this, theoretically, I used to say, it looks unsustainable, but man, we've seen, crazier unsustainable moves that just continue on. I mean, I can practically draw this thing back to here, right? No matter how I do it. Um, the funny thing is, when you're measuring angles in the market, it changes based on how far in or out your chart is zoomed, right? So I could make it a 45-degree angle and be like, this market's rising at a 45-degree angle. I'm gonna save this just save this because this is kind of something to be aware of. All it's going to take is, well, I don't know what it's going to take. I mean, the market just seems to defy logic a lot of the times. No matter, years ago, I saw someone post yesterday, a post that said, 20 years ago, if the inflation numbers came in hot, like they did, the market would be limit down. And so, and he insinuated that it was these zero DTE options, which I've talked about before, that have like sort of ruined the volatility. And so, the comment was, until all these people that are selling puts, I guess, or the zero the 0 days to expiration options gamblers or whatever, until they get wrecked, the volatility is going to be suppressed. And so I do think that has had some sort of significant effect on the market, but I don't know enough about the so-called plumbing to know exactly. Well, I do know a little bit about how that works, and so everybody. Well, when people gamble on the intraday direction of the market that's going to expire at the end of the day, it suppresses the volatility, because what happens is the market goes down a little bit and then everyone starts betting on it to go back up. And then when the market rallies every intraday or in the morning, I won't say everybody, but the zero DTE gamblers bet that, okay, well, we're stretched to the upside, so we're going to pull back. And so they're like betting on the intraday price movements, and what it does is, obviously, like, the market makers have to hedge in the opposite direction. So it's just a constant, it's a constant sort of tug of war, almost like a seesaw. And so you see that a lot intraday. Like lately, we've been seeing, in the first 30 minutes to an hour, you get a down move, and then everyone that's gambling on the intraday direction looks at it and says, okay, well, the market's looks like it's bottomed out. Like, I'm looking at a 5-minute chart right now, and so we've had, the first 40 minutes or so have been down, just like a lot of times, 3 out of 4 days recently. And then there's like kind of a spike low, and you get a little movement to the upside. And so now it looks like a pretty good bet. Hey, the low might be in here, and so I'm gonna buy a zero DTE to the upside here. And so there's a pretty good chance we get a little rally from here. So, but one of these days there's going to be something. And I keep saying that, I keep thinking that, something that kind of thwarts all that and gets the snowball sort of rolling in the other direction. So, but hey, who knows? Let's take a look at the weekly perspective. Actually, I wanted to. I going down my list here. I got like over here off the screen. I got like a little watch list that I like to do in order. And when I pop to the weekly charts, I like to go to this one because it shows the pandemic, right? The pandemic high. So it goes back to the beginning, or actually, well, that would be the end of 2019, but the beginning of 2020. So here we are. Interestingly enough, weekly chart, big, gigantic cup and handle, and I mean, it broke out to a nominal high after, it took 2 years, literally. And it's interesting because it's practically, it's very close to exactly 2 years from the prior high here at the beginning of 2022. This high was in January, I believe. And then so, big cup and handle we talked about over the span of those 2 years. And then, here we are. It broke out, and it hasn't really looked back. And you can see there's only been a couple of down weeks, right? I guess the first week of this year looks like it was a down week, but yeah. So I'm not going to stretch. I'm not going to screw this chart up by stretching it back to 2017, but you can take a look at that and see, quite frankly, 2021 was a relatively persistent uptrend too, right? But look how tight these weekly bars are. I mean, you expect to see, somewhere you expect, even 2021, there was some long range weekly bars. There was some volatility in there, but these are pretty, so far this year, these weekly bars look pretty tight to me. All right, so I mean, the other thing to keep in mind here is that um, I like to remind everybody of this. So we're getting close to an actual all-time high, right? Based on the inflation numbers, based on the inflation since the all-time high, right there, 48.18. See how I got that marked right here? That's why this is my go-to weekly chart because it's zoomed in a little bit. But anyway, based on, if you take 48.18, you plug it into the in the beginning of 2022, or January 2022, if you plug that in the CPI calculator, what you get is it's going to take 5,300 today to have the same purchasing power. And so, adjusted for inflation, the market still hasn't, it's getting close, but it still hasn't made an actual all-time high. It's a nominal all-time high. And in the big scheme of things, we know how important that is because, like I said last week, take a country like Venezuela or Argentina or something and compare their inflation rate to their stock market. And so the idea is that, stocks are supposed to keep up with inflation. Theoretically, bonds are too. Right? So, but that's sort of a hoodwink. Even the inflation numbers that come out are extremely subjective and questionable, and of course everybody tears them apart and says that inflation is a lot worse than what the numbers show, and that's true because it's always something ridiculous. Like, I think it was in yesterday's report, they showed that there was no medical inflation or something, or healthcare service or whatever it was. I mean, but you get the idea. And then I remember, I think it was the last CPI or inflation report, it said something about, it was something like, insurance costs went down or something, and we all know that they haven't. So, but I mean, the good news, if there is any good news, is it seems like, there's more stuff on sale. It seems like there's some decent, sales at the grocery store, so, or at least my grocery store, but I mean, so, and a lot of things haven't gone up again recently. So, inflation is definitely tamer than it was. But, um, what I was talking about last year and even, prior years about the idea that it's not the rate of inflation, it's the overall price level, right? And so everything's, twice as expensive as it used to be, practically, if not 50% more and all this. I mean, going back to, like I said before, going back to here, this is basically the, like, right there, pre-pandemic, right? Pre-pandemic. There's the pandemic. And so, if you go from just say 2020, like right here, the beginning of 2020, pre-pandemic, and you compare the cost of living and the price of, everyday stuff that you buy to now, it's significant. And that's a short amount of time if you think about it in the big span of things. I mean, it's not like your grandparents used to say bread was a nickel. I mean, we're talking just a few years here. So, and I mean, it still bothers me that the Fed and all their PhD economists and all this and that. I mean, they're not stupid, and so they had to have known that creating trillions of dollars out of thin air was going to result in inflation. And I don't know. I mean, it was just a weird period of time when you look back on it anyway, because there was a lot of, like, plumbing problems in the financial system prior to the pandemic. So, but that's a whole nother story. Anyway, back to the very short term here. Um, it seems like on a day-to-day basis the market's just kind of creeping around, right? Obviously the trend is up. Um, and here's a big warning sign. I think Bank of America just raised their S&P price target. I mean, in years past, um, you get these rallies, very persistent rallies that look persistent and like this, and it seems like nothing can bring the market down. And then the next thing you know, either Goldman Sachs and Bank of America raise their price targets, and then that's like I talked about this trend line break and being a yellow flag. Well, Bank of America raising their price target, that's a red flag, because typically within and I'd say maybe a couple of months of them doing that, you actually in the past have gotten a sell off, just because they're it's just how they operate. So speaking of that, somebody, when I turned on CNBC this morning, somebody out there like downgraded Tesla, right? And I'm thinking to myself, typical Wall Street. I mean, this has been as long as I've been doing this, and that's been obviously since stocks traded in fractions, but typical Wall Street. They wait for Tesla to go from 300 to 172, and then they downgrade it and lower their price target. So, I mean, and I don't know who it was, I forget. So, anymore. I mean, I take all that stuff with a grain of salt. But wouldn't it have been helpful for them to downgrade it like up here? Right? I mean, if the idea of a Wall Street firm downgrading a stock is that, that means that their clients should lighten up their position, it would have been more helpful if they did it up here. So, like I say, this is typical Wall Street, and it's kind of silly too, because it seems to move. It's for some reason, which I quite can't understand, it actually does seem to have an effect. So the House is voting on a bill right now that could ban TikTok. Boy, I can't wait to see if they ban TikTok. I can't wait to see what the reaction of like all the young people, what do they call them, Generation Z. I think they said that, I think I saw on the news last night, there's 170 million Americans, most of which are kids, young people, on TikTok. So that's kind of interesting. Um, I would imagine if they banned TikTok that would be good for Facebook. They call it Meta now, but I'm always going to refer to it as Facebook. Look at that chart. Absolutely ridiculous. So, I mean, it's crazy, but look at that. There's a 5-bagger there since the low. But, it is what it is. Yeah, that's just a crazy chart right there. But it's also very indicative of the mega cap, the Magnificent Seven, they call them now. I remember when they called these things, what the heck was it? It's been so long. The Fang stocks, yeah, it was the Fang stocks, and so they had to change the name to the Magnificent Seven. There's Microsoft, similar pattern in that it bottomed out back here, and it's practically doubled. But here's the interesting thing is, we might as well go through them now that I'm pulling them up. So some of these charts I don't follow on a regular basis. Google's actually got a decent little sort of pullback pattern working here, right? So that's interesting. That is a little bit interesting right there, because you have almost a perfect channel right there. Look at that, that's a 200-day moving average right there. So Google testing the 200-day moving average. Whoops, I didn't mean to save that. Jeez. I guess I'll save it to my list. These charts, back in the old days when I used to use those free stock charts, man, I'd whip around on those things. I never had, weird little things like that pop up. But anyways, it's actually kind of in an interesting spot right now, because it's, as we speak today, as we speak today, it's trying to poke out of the top of this thing here. So of course there's some resistance right here at the 50-day and this big down move here, like this big red day, but might be worth looking at. Actually off of this low right here. It's a pretty viable. Maybe if it came back down in a little bit, but it's pretty viable off of this low. Like that $130 is probably good. But anyway, moving on. Moving on. The one I wanted to look at was Apple, because all of a sudden, and here's the thing about Apple, and this has left a lot of people scratching their heads. And I don't watch nearly as much CNBC as I used to, but if back in the day, over the past couple years, if you told me that, Apple was gonna, pull back 20%, and roll over and the chart was gonna look like this, you'd never think in a million years that the market itself would be at an all-time high, right? So that's extremely mystifying, and the only thing I can figure out, is that a couple of these other stocks, Nvidia, maybe AMD, is like making up for that, right? So that's the theory, is that Nvidia is pulling the weight for Apple. AMD is an interesting look too. Why are these charts running so slow all of a sudden? There we go. Yeah, AMD, that kind of spike high reversal right there is interesting. That may, let me zoom in on that a little bit. That kind of outside reversal is typically indicative of a significant pullback of some sort. And there's a couple other little ones back over here, but that one was extremely significant. And that may have been, well, I don't know. It may have been their earnings. I wasn't paying that much attention to it the other day or last week or whatever. So that would have been Friday. Ken Griffin is talking about the markets from Boca Raton. So, and unfortunately, you're listening to me talk about the markets instead. But real quick, let's look at the Q. Oh, anyway, my point is that Apple has kind of lost its luster a little bit here recently, which is kind of strange considering that the market at an all-time high and Apple down significantly from its high and sort of struggling. So I saw I don't know if it was an article or a post or any more, media's media. And so, but I did see something that to the effect of, Apple hasn't really innovated in a long time. And whatever the heck they call that thing that you put on your head, and their little virtual reality thing just does not seem like it's going to be, it's going to go mainstream. It's certainly not going to be like, them inventing the iPhone, obviously, but because you put one of those things over your head and your face, and it's cool for 5 minutes. But quite frankly, if somebody gave me one of those things, I can't see myself putting it on all that often, just because, and I'm old school, but in my mind, someday maybe I'll do a whole thing about this, but in my mind, like making everything digital and technical and virtual reality and more complicated is not it's not progress in a lot of stuff. There's a lot of I saw something last week about somebody got like this digital, a bird feeder that notifies you when there's a bird at it or whatever, and then all of a sudden, obviously you put a bird feeder and seeds out there, and like all these birds were flying, and his phone was just one after the other, like all these notifications. It was blowing up his phone because, and stuff like that's just silly. I don't need a digital toilet or refrigerator, and I don't need all these different complications. I don't need an oven that has to have a software update before I can bake dinner, right? So a lot of that stuff and of course I have an elderly mom who grew up in a different time before everything was digital, and she really struggles with it. I mean, just even using her computer and that, she struggles with. And, this whole thing about self-service digital everything and making things complicated, and we have a lot of conversations about that. But I don't have time to get into all that. But someday, and the old when you, the older you are, I think the more that you kind of think along those same lines. So there's somewhere out there there's a backlash against all this so-called technology progress because a lot of it is just useless. I mean they come out with they come out with like a software upgrade, and the primary thing of it is like something that nobody cares about. Like you can put the calendar as like a big square on the front of your phone. Well, things like that, and like emojis and all that. I don't think I've ever used an emoji my whole life. I mean, it's ridiculous, but everything's gotten more complicated, and sometimes just the old school way of doing things, to me the analog world was a much better place. So there's just no need to complicate everything, but I'm getting off topic here. So basically what got me on a rant, I could probably rant on that for a long time, was the fact that Apple's big innovation here lately was their VR headset. I can't even, can't even remember what they call those things, to be honest with you. But anyway, you can see that it didn't break the stock out to new highs. So this is a little concerning, and quite frankly, um, it'd probably be worth digging into. Probably be worth digging into why, how in the world this can be down so so significantly with the Qs up at an all-time high. So hang on, let me find my little chart here. There it is, the good old Russell 2000. So this is pretty amazing. This is the sort of the one thing the market really has going for it, is the fact that that the Russell, after spending literally 2 entire years like bouncing in this sort of zone, it's broken out and it's getting back to where it was 4 years ago. So I guess this is sort of a positive because this is this means that more like average, regular, stock picking type stocks are actually, starting to come up a little bit. So um, it's amazing to think, the S&P and the Nasdaq, on these straight up tears like this, all-time highs that the Russell which is obviously pretty broad index, I guess. I don't know. I guess let's look at VTI. I think has always been my go-to of like the total stock market ETF. Quite frankly, I'm not sure how this is weighted though. um, I'm not sure. I'm not sure if it couldn't possibly be like this has to be market cap weighted, but I'm not. Don't quote me on that because I don't know. But just looking at the chart, it seems like it's market cap weighted. So, but it's got the same big gigantic cup and handle pattern, and quite frankly, if you did the math on this, it looks like it's pretty close to an inflation adjusted high too. So that's kind of interesting. Real quick, let's look at ARK just because longer. Actually, it's been a while since I went through a bunch of charts zoomed out this far. Typically, I flip over to the weekly chart if I want to go back and and see what everything looks like going back a few years. But this is kind of cool looking at the daily charts. I got to tell you, this kind of looks pretty good. I mean, I could obviously draw like a horizontal resistance line, but this is a pretty nice looking chart. What makes me nervous about this is the fact that the market's just been on a straight up tear and hitting all-time highs and this and that, and this is just starting to look like it's a potential recovery, and I'm just, I'm sort of afraid that as soon as the overall market has a pullback, this thing's going to have another big one of these legs down. And that, that may be the buying opportunity, right? Draw a little uptrend line across those two lows right there. And I'm not saying that anytime soon that you're gonna get an opportunity to buy it down there, but hey, and of course, there's the 200 days and the 50 day. So, but looking at a longer term chart like this is kind of, I should probably just save that. Oh, geez. See, well, I'm not going to get into complaining about stock charts, but I already had ARK in my watch list, and so in theory, it's, when I pull up a chart of ARK and whatever I mark on it should just save it in my existing watch list. So now I've got ARK in there twice. I'll have to delete one of them. Anyway, interesting pattern there. Let's zoom in a little bit on this. Yeah, it's kind of, could the over and under now is $50, obviously, and so yeah, even a pullback into, towards 40. So I don't know that I'd be in a rush to step up right now. So look at the moves, like the move from the lower to the upper end. There's been several of them, and then the consolidations, the pullbacks are relatively orderly. But see, at this point here, what you'd want to see is like a sell down like that, right? Or at least a sell down to around 40. So you can see that, um, higher low. That was actually a lower low, but that's sort of, this is kind of an intermediary pullback here, but you got a higher low there. And so look how these are spaced out. I mean, that's 10 months, right? So it'll be interesting to keep an eye on this. And I haven't really spent a lot of time seeing how, they've rejiggered their holdings and all that type of thing, but Cathie Woods, at some point back here, I think it was last year, claimed that this is the new NASDAQ. So that remains to be seen, I suppose. So that's about it. I mean, I've used up my time kind of ranting and looking at the indexes. So, but there's a lot of opportunities out there. But the problem is that let me just go back to my original chart here, right? It's a little late in the game, if you ask me. It's a little late in the game to get like super aggressive, and so what you want to see is, a little bit of a pullback or dip or something like that. And I don't know, what it is. Part of the back of my mind says that right, the behind the scenes people, somehow or other, want to keep the market, they want to keep the market on this track right here till November, right? Because that's good for re-election. So let's just hypothetically, and then I'm going to wrap this up. Let's just hypothetically pretend that they're able to keep this going until November at this particular trajectory, right? Say they're able to. I used to be able to do this really good on my other charts, but yeah. Here's your uptrend. If the idea is that they can just keep the stock market just drifting up at a nice, slow, sustained pace until November, because of the wealth effect and the fact that everybody feels real good when the markets is going up. Whoops, see this, I hate these stock charts. Yeah, so there you go. Think they can pull that off? I don't know. It looks a little that's kind of aggressive. That's that's a more aggressive price target than Bank of America, I believe. So anyway, um, my guess is that sometime between now and then we're going to get a little bit of a dip or a pullback that breaks that trend line, and so that will be and oh jeez. All right, hang on. Drives me crazy. So anyway, I think you I think you get the idea. I was being a little bit facetious there, but so, the trend line, and of course I screwed up the trend line by doing that. So I'm not gonna save this chart. Do I want to save it? No. Um, so anyways, keep your eye on that. Keep your eye on that, and when the next dip comes along, we'll look for some support. First we'll see what it is that caused the dip. And quite frankly, I'm surprised that yesterday's numbers didn't do it, right? So there'll be something eventually, though. It's kind of things, game of patience. So um, if I was like fully invested right now, I'd take this opportunity to lighten up a little bit. Now that you have most of your purchasing power back since the prior peak. So we'll talk about that more next week. Thanks for tuning in. See you next week, same time, same place.